Hershey is famous for their chocolate, but did you know their product offerings include chocolate and non-chocolate confectionery items? Like gum and mint refreshment products, protein bars, snack items like popcorn, pretzels, spreads, and mixes, as well as pantry items including baking ingredients, toppings, and beverages. Their North America confectionery segment includes a wide variety of brands such as Hershey's, Reese's, Cadbury, Good and Plenty, Heath, Kit Kat, Payday, Rolo, Twizzlers, Whoppers, and York. The North America salty snacks segment offers Skinny Pop popcorn, Pirates Booty snacks, and Dots Homestyle pretzels snacks. Their international segment manufactures and sells many of the same brands, along with other regional offerings such as Pelon Pelo Rico, confectionery products in Mexico, IO snack products in Brazil, and Sofit beverage products in India. The company has 3 reportable segments: North America Confectionery, North America Salty Snacks, and International. The first segment handles traditional chocolate and non-chocolate confectionery products in the US and Canada, as well as retail operations and licensing agreements. The second segment deals with salty snacking products in the United States, such as popcorn, baked snacks, and pretzels. The third and final segment covers all other operating segments that are not individually significant, including international regions outside of North America. Hershey's main customers are wholesale distributors, chain grocery stores, mass merchandisers, and various retail outlets in North America and worldwide. They also sell to vending companies, convenience stores, dollar stores, concessionaires, and department stores. They explain their marketing strategy focuses on brand equities, product innovation, and consistently high-quality products. They use promotional programs for customers and consumers to stimulate sales at different times throughout the year. Sales are generally higher during the third and fourth quarters due to seasonal and holiday-related factors. The company manufactures mostly for stock and fills customer orders quickly, resulting in no significant backlog of unfilled orders. Hershey's primary raw materials are cocoa products such as cocoa liquor, cocoa butter, and cocoa powder, which they purchase directly from third-party suppliers who source cocoa beans mainly from Far Eastern, West African, Central, and South American regions. The company uses other inputs like sugar, corn products, dairy products, wheat products, peanuts, almonds, and energy in their production process. These are mostly purchased from U.S. suppliers for domestic and Canadian operations, while international operations may import what is not locally available. The trading company in Switzerland handles cocoa procurement, including price risk management, physical supply procurement, and sustainable sourcing oversight. They also adjust product prices and weights as needed to accommodate changes in input costs, competitive environment, and profit objectives while maintaining consumer value. Hershey's confectionery and salty snack brands hold a strong consumer acceptance and rank among top brands in North America and some international markets. Overall, competitors are characterized as being large private companies and retailers with significant resources and international presence. Factors affecting competition are product innovation, quality, price, brand recognition, effectiveness of marketing and promotional activities, ability to cater to consumer preferences, convenience, and service. The company has faced increased competition in the snack industry but continues to innovate and acquire to expand its brand's reach into new snacking occasions. In addition to owning several registered and unregistered trademarks and service marks, Hershey grants trademark licenses to third parties for specific products under the Hershey's and Reese's brand names. Hershey also has licensing agreements with several companies for manufacturing and/or selling and distributing certain products. These long-term extendable agreements include brands such as Cadbury, Kit Kat, Rolo, Good and Plenty, Heath, Jolly Rancher, Milk Duds, Payday, and Whoppers. The company conducts research and development in countries including the US, Mexico, Brazil, India, and Malaysia for creating new products, improving existing ones, enhancing production processes, and implementing modern technologies. In regards to the impact of rising costs for raw materials and energy, the business relies on various commodities such as cocoa products, sugar, corn, dairy, peanuts, almonds, natural gas, and diesel fuel. Price volatility and supply fluctuations could lead to increased costs if the company cannot offset these through hedging or other means. If they are unable to pass these additional costs onto customers or reduce product sizes sufficiently, this could negatively affect their financial results. Other challenges and factors affecting the company's success relate to market demand fluctuations, competition, pricing pressures, and consumer trends. The industry is intensely competitive with large players, which can lead to increased expenditures on promotions and advertising, posing risks to sales and profits since margins can be driven down. Hershey also needs to keep maintaining relationships with customers like McLane Company, a major U.S. wholesale distributor that serves convenience stores, drugstores, wholesale clubs, and mass merchandisers, as well as being the primary distributor of Hershey products to Walmart stores. For more on Walmart, Hershey, and other companies, follow Ascencore. Thanks for watching and have a nice day.